Stock market today analysis for Aloha Friday, February 17th, 2023. Before we get into this video, there is a link to ihavesuccess.com in the description of this video below. Check that out, because the mission of ihavesuccess.com is to help busy people cash flow the stock market to achieve financial freedom without spending a lot of time in front of a screen, so you can be doing the things you love instead. Because in 2023, I believe that if you have an internet connection, a bank account, and you spend money at least once a year, then you have no legitimate reason not to be selling cash secured put options on stocks you'd be happy to own. In about 8 seconds, a video is going to pop up right here. It's going to be at the 1 minute mark. Easy for you to remember. Boom! There it was. 1 minute, right? That's easy to remember. 1 minute. That video gives you 5 reasons why you should be selling cash secured put options. When you know why, figuring out the how-to is a lot easier. And ihavesuccess.com will help you figure out that how-to. You're going to watch that video at the 1 minute mark. Watch this playlist. It has 5 videos in it. Download. There's 4 downloads here. Download those 4 downloads. The 4 downloads, the playlist, and the video at the 1 minute mark will put you in a decent position to start paper trading, selling cash secured put options on stocks you don't mind owning. And then from there, once you feel like you got a good grip of it, if you so choose, you could move into real money. The beauty of this strategy is twofold. Number one, it is not get rich quick. That means, since it's not get rich quick, that means it doesn't blow up your account quick. The beauty of this strategy, it's the tortoise. Slow and steady. But I tell you what, if you have the endurance to run this marathon, you will win the race. You absolutely will. Between dividends and option premium, and following these downloads, especially the 4th download, you'll be in a position that you can systematically replace certain annual bills with dividend income and option premium, right? And it's a beautiful, beautiful thing. So take a look at that stuff. Let's get into studying that, studying what happened. And before we really start studying the markets, we study the markets. Email. I think this is a free email. If it is free, get it if you want it. If it's not free, I don't recommend it. I personally, if I was paying any money, I would not pay money for this. I think somehow I bought a product from these guys several years ago about fundamental analysis, and I think that's how I got on the email list. And sometimes I just kind of read through it really quickly. And this is what I wanted to bring to your attention. 82% of companies in the S&P 500 reporting their 4th quarter earnings. The results aren't amazing. 68% of companies beat Wall Street's estimates, below the 5-year average of 77%. Profits declined nearly 5% from last year. For the 85 S&P 500 companies that offered earnings forecast, 76% came in below expectations. Oh yeah, by the way, stock market is going to be closed on this coming Monday. This is not good news. However, I want to remind you, if you don't know, about the Working Group on Financial Markets, created in 1988. You can read through here on Investopedia. You can read through on all these different websites, articles, watch videos, whatever you want to do. The thing that the reason why I'm pointing this out is because I think there's some truth in this, and I'm not pointing this out as a critic in fear, right? So let's scratch that real quick. That's not why I'm pointing this out, right? I think there's some truth to this. The Plunge protection team doesn't just advise, but it actively intervenes to prop up stock prices. colluding with banks to rig the market in effect. I believe there's some truth to that. So here we have an example of things that would push down on the market. But you also have things like the plunge protection team that push it up. You also have things like 401ks that push it up. How do 401ks push it up? Because basically every month or every paycheck, I don't know how it's set up, money is coming out of people's 401k and it's buying stocks. What makes the price of a stock go up? Buying. Something else that we have. Let's say, how about a war in Ukraine? Overall, is that good for the general economy? No, I get it. Some businesses like Lockheed Martin, Raytheon, maybe Blackwater. I don't know if that's they changed their name or whatever. But you got these warmongering companies that really profit off death and destruction. Yeah, those companies will do it. But overall, the stock market, war, death, pestilence, that type of stuff, there's only a handful of companies that's really profitable for. And for the general economy, that kind of thing is not good, right? But you got these forces, other forces also at play. So my point of this is just that as Robert Kiyosaki showed me many years ago, a coin, it's got the head, it's got the tail, but it actually has this little edge right here. A coin has three sides. It's got the head, it's got the tail, and it's got the edge. And my job, and if you so choose this mission, your job is to stand on the edge of the coin, to look at the heads, well, I guess in this case, look at the tails, look at the heads, and make the best decision for yourself. Make the best decision. So this is not good news, right? Now this one right here, 68%. Okay, that's like whopping. What is that? Like 9% down. Whopping 9%. The stock market's like been around for like 100 years or so. I mean, I would be more concerned if this was like 25% down, 30% down, 50, 70, right? But 9%, anyone can have an off year, no big deal. I'm sure there's times in your life where you made 9% less than you did the year before. Did you commit suicide over it? Did you think it was the end of the world? No. So I get it. Okay, but it's down, right? Maybe this one, profits decline nearly 5%. Maybe that's a little more, but still 5%, that's not 50, that's not whatever. But it's not up 9%, it's not down, it's not the same. It's not up 5%, yeah, it's down 5%. So the point of it, besides to remind you that the market's closed on Mother's Day, or on Monday, the point of it is stand on the edge here. Stand on the edge. Look at all the information, right? And sometimes it's like kind of reading between the lines in a way, right? Because this is not something that like I graduated high school in 1995. I was in this econ class in when was I in the econ class? Was it 1994, right? So this came out in 1988. I didn't hear anything about this. We had this class, and we had to do this like mock picking stocks and stuff like this. My school seemed like a decent school. Like when I hear about some other people's public education, it seems like my school was the golden standard compared to what some other people are getting nowadays. But my point here is that, right, this doesn't seem to be taught in the school, and it doesn't seem to be talked about on CNBC or whatever these channels are. But yet it exists. So make of it what you will, but just realize that there's forces that help keep the stock market up. So sometimes when people look at this market and they're like, I don't get it, why isn't it going down? Well, sometimes you got things in play to keep it up. But another thing to keep in mind, let's say you got forces pressing the market down and you got forces pushing it up. All right, if it's sort of a balanced on each side, then we might end up going sideways. And until I see anything different, right? That's right now. That's what I think is going on. That's what I think before. I don't know when it was. Maybe even before the beginning of this year, 2023. I was thinking, sideways to down, and I'm still in that camp. I'm still in the camp of sideways. I'm not sure about down. I'm not sure about up. As I've been saying on these last videos for I don't know how long it's been now, I'm kind of waiting to see what's going to happen. Let me just clear that up. I'm not waiting to take action. I'm taking action. Right? Today I acquired 100 more shares of a particular stock I want to own for the long term. And I had other options expire worthless, and I opened up a new cash secured put option position on a company that I want to own for the long term, and at a strike price that I'm happy to buy it at. And I had this order open for probably all week, maybe even longer. I can't quite remember, but finally I got filled at the price that I wanted to get filled at. So I'm definitely taking action, right? I am putting on positions in the market as we speak. So when I say what I'm waiting for is right now I'm definitely committed to believing we are in a sideways market. But as far as if it's going to break up or down, I'm waiting to see, right? I'm waiting to see what's going to happen through this 420 and 440 area. Now, right now it's not getting to the 420. So let's say if it never gets to the 420, I don't keep waiting to see if it's going to get to the 420. It just told me like it's not getting to the 420. How will I know it's not getting to the 420? Let's say like I figured out this week it's not getting to 420, right? How do I know? Because a week has passed and it hasn't got to 420. Basically, was it I think maybe last Friday the market closed, at least SPY closed around 408. I think that was last Friday. And now, we're closing at about 407. So, what's this right here? So I'll figure that out. Open, close, see, watch right here, and watch right there. Try to hover on. This is a weekly chart. So you see February 6, 2023. You see that close 408. Right, and now we're at 407. Let's take a look here just to verify something. Yep, at least on, I guess, what's that there? This week, maybe I'm kind of off on that. I don't know. Close at 4. Oh, yeah, that's the week that it opened. So that is this week right here. Closed on Friday. All right, so last Friday closed at 408. Now we're closing at 407. We basically went sideways. We're down about $1, right? And in this week, I remember last week thinking, oh my, it might hit 420, but it didn't. So now we're starting a new week. I'm looking to see. It's basically in the middle of 400 and 420. I'm looking to see which direction it's going to go. If it starts going down, like I think there's economically, fundamentally, I think there's more reasons for it to go down. But like I said, there's forces pressing it up, right? Plunge protection team, 401ks, I don't know, people's fascination with listening to their investment advisors that just say, no matter what, buy more, buy more, buy more. And I don't know, like, whatever those forces are, there's things pushing it up. If that wasn't true, we wouldn't see something going up. So it's going up for some reason, right? It's not going up because there's a war in Ukraine. That's not going to be driving the stock market up. It's not going up because there was a railroad accident in Ohio that no one from like mainstream people don't want to talk about, and they're trying to cover it up while all the people are potentially having bad health problems, and it's probably very, very disastrous in this time where we're talking about, oh, we need to save the earth, right? It's not going, stock market's not going up because of that. No, it's not going up because of that, but it's going up for some reason. So the force is pushing it down, there's forces pushing it up. And right now going sideways. So if it dropped down, I would be more understanding to that. So I'm kind of positioning myself for it to drop down. Sideways to down is how I've been trading. And it's been working out well for me. But if it starts going up, I don't want to continue to be trading in sideways to down. I don't care if it's going up for like quote unquote not good reasons. Like I don't care if it's going up for manipulation. I didn't care. I'm partaking during this bull market here. I don't care. And I don't care in regards to my own personal trading account. Now there's another side of the coin that I do care for my my nieces and my nephews, that someday the rooster's probably gonna come home to roost, and we're probably seeing a bit of that now. But my point, the point here is what happens between the 420 and the 440. If it gets through 420, if it gets close to 420, depending on how it behaves. Right now, it's just not getting close to it, right? If it gets close to it, and it's sort of like bumping its head on it, but it's not going through it, I think the longer it bumps if it just can't get through it, it can't get through it, right? But if it does get through it, but it gets through it kind of in a very weak manner, maybe it's going to turn around. All those are different scenarios than if it gets through it and it just like blasts through it. And not only does it blast through 420, but now it's like it's moving through into the 430s. So depending on what's the power of it getting through, or if it right now we got a low, higher low, higher low, higher low, higher low, but right around this 400, right? Not exactly at the 400. So let's see how things play out. So again, you got to kind of balance things out here. One thing that I still kind of struggle with is sort of like an opinion or a moral stance. And opinions and moral stances don't necessarily help you make money in the market, right? So the plunge protection team. You can hear the moral stance right here. Critics fear, right? Those are emotional type of things. Critics, we're against it and we have fears about it, right? This sort of stuff doesn't really help you make money with the market. I think just having, the more you can be just kind of like robotic about it. Like, okay, there's this thing called the plunge protection team. In theory, this is what it does, but what it does could easily lend it to be doing this. Let me be cautious of shorting stocks at the moment, right? Until I see something stronger. Like this doesn't mean that the stock market's going to crash. It might, right? We saw it pull back here. So you got to keep these things in. Let me rephrase that. You don't got to do anything. In my opinion, you don't got to do anything. So please give me some wiggle room when I make statements like that, some absolute statements. For me, in my opinion, it's in my best interest, and in my opinion, it's in your best interest to just understand the forces at play and sort of separate whether you like those forces or not, whether you think those forces are good for society or not. Those are two separate issues. And so when you're just looking at making money in the market, what I'm attempting to do, and what I would suggest that you try it out, see if it works for you, is to separate your opinions with just not quite facts, but possibilities, right? And so that's what I see going on with where we're at. And let's look at some things. One reason why I wanted to let's look at some things and see what, as we break down some more of the inner workings of the market. Because right now we're looking at the S&P 500. Let's look at the different sectors of it. Let's see what that tells us. let's look at different aspects of the market. Some of them are going to be more related to the S&P 500. Others of them are just sort of not directly related or correlated. We got the futures market here. And the reason why I wanted to pull this up right now is just to point out gold and silver futures market. And we see it. The gold was kind of going up. Silver was more in the sideways thing. And then they both had this drop down. 2 candles, really big drop. And then from there, they had these smaller candles going down. And let's watch this next week. Because sometimes what happens when you see this type of candle, right, with the body to the top, but you got this longer wick to the bottom. So why is that longer wick to the bottom? Because that's showing that selling pressure pushed this all the way down, but buying pressure pushed this up on each side. Sometimes this happens close to the bottom of a move. Doesn't mean it's going to be the ultimate bottom, but maybe be like a kind of a rally up for a little while or something. But let's watch and see how that plays out. Also, I wanted to point out natural gas went a little bit lower. I mean, just by a couple pennies, but look, it hit a new monthly low here. Crude oil really sold off, but it's still staying between this range of 72 and 82. I get it, 72 and 82 and some change. And what else is really notable? We talked about Bitcoin. That really took a pop up. I just haven't been paying, before I started making these videos, I paid a lot more attention to Bitcoin just because I had a lot of fun paying attention to it. This is Bitcoin futures, but I'm pretty busy with making these videos and trading now, so I've been paying as much attention to Bitcoin. I would trade Bitcoin. I wouldn't invest in it, but I would trade Bitcoin if I lived in a state that allowed me to. But People's Republic of Hawaii doesn't allow its peasants to partake in Bitcoin. Maybe there's some workarounds or whatever, but I want to avoid FTX type stuff, right? So I'd rather stick with bigger brokers and things like TD Ameritrade or Tastyworks, something like that. But Tastyworks allows you to trade cryptocurrencies, but they won't allow me because People's Republic of Hawaii doesn't allow it. But I've heard that People's Republic of Hawaii will allow the banks to. So, so much for a free market, so much for a free country. But hey, if you want to live in the illusion of it, so be it. At least we have some freedom, right? There is a little bit of freedom, just not enough freedom to trade Bitcoin if you live in Hawaii. So, anyways, I know I don't like hearing it. You probably don't like hearing it either. Let's check out interest rates real quick. The 2-year closing around 4.62 and 10-year at 3.8. This purple line right here is the SPX, and this green line is the 10-year treasury. So you can see for a while what was happening is the treasury was going up, rates of the treasury was going up, and the stock market was going down. And for a while, the stock, we have this little kind of pull off here, and treasury rates going down, and stock market started coming up. And we're at this kind of pivotal point here. So we'll see how those things play out. Here's another thing that if you listen to a lot of macroeconomic type of stuff, they'll talk about the inversion of the yield curve. And basically what they're talking about is like in a very kind of layman's terms, what they're talking about is when you loan money for these longer durations, 10 years, 20 years, 30 years, right? In theory, you're taking more risk. Now, when you loan money for 1 month, 3 months, 6 months, in theory, you're taking less risk because in 1 month, your money's being paid back. Your money's going to be paid back in 10 years. So there's 10 years for problems to happen. So generally speaking, when you make a 10-year loan to somebody, you charge them a little higher amount for the risk. In this case, who's lending money and who's taking the loan? In this case, the U.S. government is taking the loan. And people, investors, other countries, big institutions, you, me, grandpa. It used to be a big thing at my birthdays. I was always getting savings bonds and things like this. So, so right now, for some reason, you know, you're getting from the government, you're getting more money. It's more lucrative to take less risk, loan them for less time, and get higher reward than it is to loan them. You're taking more risk on 30 years and you're getting paid less. And so this is called the yield curve, right? And when they say it's inverted, it's these shorter term rates are higher than these long term rates. If it's not inverted, these long term rates are higher. And generally what happens is this is an economic forecast of some just like bad stuff to come, whether you want to call it recession, whether you want to call it this, whether you want to call it that. I don't really like sticking to like using specific terms of like recession, because, you know, they being the government last year, I think it was, just changed the definition of what a recession is. So, you know, if you're not on the same definition with people, then you can argue and bicker over small things that ultimately, like, I think like you know, if you let's say you punch someone in the face, and I come to you, and it happened to be a jab. You use the jab and you jabbed them in the face. And I come to you and I say like, man, you punched that guy in the face. And you say, no, I didn't. No, I didn't. I'm like, yeah, you did. And you know I didn't. Yeah, you did. No, I didn't. Blah, blah, blah. And then the reason why you're saying no is because you don't call a jab a punch. You call a jab a jab. You still hit the guy in the face with your fist, right? Regardless of what definition you want to use is punch, jab. You still took your fist and you put it in somebody's face. So, you know, it's sometimes when it's dealing with this financial stuff, a lot of times that's what's going on. You hear people bickering and you hear people arguing or confused, not understanding, because they're getting caught up in these like very specific definitions when, in my opinion, the skill that I personally want to build, and I would recommend that you give it a shot, is less about these specific definitions and kind of being a little bit of Sherlock Holmes here, looking for clues. And then the great thing about this, and unlike court of laws, unlike Sherlock Holmes, you don't have to prove this to anybody. You don't have to get somebody to believe you. All you've got to be able to do is open a position and close it and make money. That's it. So, you know, if your definition's wrong, who gives a rip? If you make money, that's what matters. Your definition, you know, maybe it can help. But anyways, so my point here is this is potentially giving us more bad economic information here, right? I know I'm like really lecturing on this video today. So, and if you want an apology over it, I'll give you an apology. If you like it, then you're welcome. Wherever you fall in that spectrum. Okay, so here's looking at like what I feel these general markets are, right? These bottom four right here, these are the indices of overall. When you look at these four, S&P 500, Dow Jones, NASDAQ, Russell 2000, whether you want to look at the indices, whether you want to look at the futures, whether you want to look at the ETFs, as long as you got something you're looking at, it kind of gives you a representation of that. But what do we see? Now, again, these are monthly charts, each candle being 1 day. Right? We're up on a month. We're basically up on the month here. We're up on the month here. We're up on the month here. We see our 200-day moving average sloping down. We're above it. 200-day moving average is it sideways? Is it sloping down? Somewhere in there, right? This is a little more obvious of sloping down. It's not a super strong slope down. It looks like it could be kind of flattening out right here. This seems to be sort of flat in there. This one's a little bit stronger of a downtrend, but also that might start flattening out maybe. This kind of looks flattish to down. So our big trend is kind of looking flat to possibly down and going backwards this way. Up, head up, drop off, and kind of moving up. Our 1, 2, 3, 4, 5 trading days right here basically went sideways. 1, 2, 3, sorry, 3, 4, 5, basically went sideways. 1, 2, 3, 4, 5. A little bit less than sideways, right? But kind of sideways. Does it look sideways to you? I see some sideways stuff right there. And here, kind of sideways to down. The VIX overall, which is that used to be that there was this little rhyme. When the VIX is high, you buy. When the VIX is low, you go. The VIX would be high when the stock market would be low. The VIX would be low when the stock market would be high. I don't know if that correlation is 100% intact anymore. And the reason why I don't know that got that A and the E wrong. Could zero DTA options, that's not what I'm looking for. VIX, right? VIX versus zero DTA. Oh, Volmageddon was yes. You know what? I posted this video yesterday, but I had to delete it because and I left my account information open. So you can check out all this stuff, but there's definitely some some smoke, some rumors. There's some people talking, which maybe I haven't looked into it enough, but I think it's very possible that zero DTA options could be affecting a lower VIX, right? So maybe the VIX isn't at the moment accurately representing actual fear or uncertainty in the market. And I think it's sort of like, how does it go? Like maybe it's something like people buy 0 days to expiration call options, then the market maker needs to hedge by buying shares of stock, or vice versa, something like that. Do your own research on it if you want to figure out more. But my main point is it might not be as tightly correlated. When the VIX is high, you buy. When the VIX is low, you go. Is this an accurate representation of volatility or fear in the market anymore? That's up for debate. And I'm open to hearing whatever your opinion is, but I don't have an opinion other than this is my opinion. People are talking about it. So I'm of the opinion that maybe there's some truth to it. I don't really know. We see each market closed up, but not some strong candles like this. This is the only strong candle we have, and that was from a pretty big sell-off. And it basically made it to about the 50% mark of this sell-off. So this is not even make it to that drop. This one's not even making it to the close. This is kind of right in the center there. So I'm excited to see what's going to happen next week. Technology dropped today. Healthcare had a big candle to the upside, but we're still kind of in this downward trend, right? And from being all the way up here, it's really hit this. I guess buyers really stepped up, opened under the 200-day moving average. If it stays in this trend that it has been going, we could see it under the 200-day moving average. And if this falls under the 200-day moving average, it might be a little more indication of some weakness. I mean, I guess I'm kind of sugarcoating it. It's definitely an indication of more weakness in the at least bull trend. But again, the plunge protection team and things like that, you got these different forces. And luckily for me, and what I would suggest for you too, put yourself in a position where you're less dependent on choosing direction, right? That's the other benefit that I forgot to tell you about. Your situation, when you do this well, you're in a situation that you're just less dependent on direction, right? It's a little bit harder or a lot harder to lose money when you're doing that well. So definitely technology kind of breaking its uptrend for the moment. It was kind of going sideways. We'll see what happens with it next week. Seems like hitting the support around that 139. And then the financials really just kind of moving sideways, but sort of lingering towards the bottom end of that range, with this 36 area being pretty strong. Now these three sectors of the market make up a good chunk of the S&P 500. Industrial still kind of moving sideways here for about 2 weeks now. Basic materials, same thing, but kind of dropped down a little bit lower. So we're really close to this low over here, and getting closer to that to this over here. And the communications was kind of it gapped up, moved down, kind of moving sideways. We got this downward sloping 200, downward sloping 200, kind of sideways 200, sideways, started moving up, downward sloping 200, downward sloping 200. So energy really dropped down today. And that on some strong volume there. Look at the volume. This volume really came in strong. And different things. And then what is that? What do you call it? Consumer discretionary, kind of moving sideways in this range with that downward sloping 200. We got the upward sloping 200 here, but looks like we're getting ready to test that. And the consumer staples overall in the sideways range, kind of got a little bit lower to the bottom of the range, shot back up, but it really just seems to be riding this 200-day. And you notice that it's sort of riding it down though. Utilities below that downward sloping 200, kind of moving sideways, going this way. Real estate got the strong downward sloping 200-day. It had this nice bull run for a moment, peaked out here and reversed, and it's just kind of been having this nice, not as smooth of a downward. You notice, look at all these green candles in here, but they keep moving down. And on the retail side, kind of having this run up with downward sloping 200-day moving average. So my friends, I don't know what you're going to do because I don't know you. And I know what I'm doing, though. I'm 100% doing this. This is working really, really well for me. And it's not the only thing I do. Some other stuff that I do too, but this is my go-to all the time, day in, day out, up market, down market, sideways market. The only thing that really, with this particular strategy for me, the only thing that changes is when we start hitting the strong bull market, I start doing more of the wheel strategy. Right? When we're in a down market, I'm looking to add to my dividend portfolio. I'm looking to add to my long-term portfolio, stocks that I want to own for a long time, that when your good buddy Brent is like 80 years old and I'm drooling and in a nursing home, I'm just going to be reaping some dividends, and I don't have to look at the markets and depend on my cognitive abilities. Sideways market depends where it's sideways, right? Sideways down here, I'm still as I mentioned, I opened a position today. I got filled on it today, but I had that order in the market for at least a week, or at least sometime the beginning of this week. I don't remember if it was the beginning of this week or the ending of last week. And it took a while. It took a bit of a drop, right, in order for me to get filled at the strike price I want, at the premium that I wanted to get for it. And so that's what I'm going to do. I'll keep trading crude oil. I'll keep doing this. And when I see an opportunity that presents itself to go long or short, I will do that. But if I don't see something that's crystal clear to go long or short, and I can keep doing my bread and butter strategy that puts me in a position that I have a very difficult time losing money, and I keep bringing money in, I'm okay being the tortoise, right? You do you. I don't know what that might be of what you got to do, but I'm encouraging you to take a look at this. Aloha.